Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
And welcome into the program. This is Navigating Retirement. Charleston Lowcountry, your weekly resource for information and guidance, a common sense approach to planning for your financial future. And our resource for that information, as always, president and founder of the Coastal Financial Planning Group, Rick Durkee. Rick, welcome back in.
Good morning, Peter, and glad to see everybody again. And, since you do see me, all right, I'm going to have to say that I only am coming into the office once a week right now. We are an essential business at the Coastal Financial Planning Group, but I'm doing my work from home. I'm doing a lot of Zoom meetings and things like that. And so, hey, this is me. This is casual Rick. If it was normal times, you'd see me with the tie on and all that. But hey, I'm just as serious as any other time being casual here today with you on this podcast of Navigating Retirement.
Yeah, well, I nobody's going to begrudge you, Rick. I think all of us have.
Hey, I shaved.
Yeah, we've let down our standards just a wee bit here in the midst of all of this. Lucky we have fully clothed and even collars on, both of us, looking fancy here, I think.
That's right.
For the times.
That's right. Right. Yeah, because some people, you do your Zoom meetings now, and people are saying, "Yeah, I'm not gonna do the video part. I'm just gonna put my name up there on the screen because I didn't shave today or I didn't take a bath yet." But hey, just glad to be back here again and helping people as we can through this these times. I mean, they are tough. It's getting a little bit better. Okay, here in South Carolina, we're seeing positives and hopefully we'll get things back to normal here shortly. But again, it'll be the new normal, and let's take advantage of the opportunities that we're given in that new normal.
Well, Rick, before the program, we were talking, and you mentioned that one of your portfolio managers had made an interesting comment, and it actually, we were speaking of personal experience. There are some places that are busier than ever. It seems like those home improvement stores have the line around the building, but things have gotten more expensive in there, if you've noticed. And you were mentioning that, yes, that thought and that reality was echoed by one of your money managers saying that one of his biggest concerns right now was the potential for inflation into the future.
Yeah. And so this was about 6 weeks ago, and our core manager manages our core portfolio for us, the firm out of Chicago, Tabor Kosmala. Phil Kosmala was mentioning his data points that he analyzed. This was 4 weeks ago. And again, he was saying, that none of this could have been predicted as far as how it happened and how it affected the markets and all. But he did say that there was optimism going forward as far as the opportunities that would shift, from the losses in the market, large cap stocks, for example, the opportunity for buyback in certain sectors of the economies, or asset classes, there was going to be opportunities. But his big point that he made was this. He said his biggest fear, though, is now inflation.
Yeah.
And so we have to think about how we have inflation addressed into our future income needs and how it may cost much more than it did 10, 20 years ago for that loaf of bread even.
Yeah.
And it's all about supply chain economics. I mean, if it costs more for, people to deliver things to us, then we're going to have to put things in check as far as possible inflation. But here, let me think. My mind's always thinking as far as opportunity, Peter. So didn't we learn that now? I mean, I was online just the other day, and I said, I really would like some of that, and I won't mention the good, okay, but I'd like it, but I'm not sure it's at this retail store or not. Let me just go online. And I go online and I find it. And I find it where it can actually be delivered to my home. Okay. And so that saves me the time of going from store to store. Oh man, they don't have it on the shelf.
Yeah.
Okay. It saves me the gas. It saves me the effort. It saves me the frustration. And it's delivered to my home. And maybe it costs just a little bit more. But how much money did I save elsewhere that if inflation does start affecting us in the actual cost of the goods we buy, we just saved money on gas and time. And what did you do with that time instead of driving all over God's creation trying to find that particular item you were looking for?
Never thought we'd resort to deliver toilet paper, right? That's the hot commodity. I don't know if that was seriously your product or your good, but
it wasn't.
Yeah.
But
well, I mean, Rick, if things do get more expensive, retirees have that finite amount of money, not planning on going out and earning any more money, work with what we have here. That's got to be of particular concern to retirees specifically. And then you talk often about designing that retirement income plan. We've got to have different segments of our money and build the potential for inflation in there, I think. But in times of past, you look historically and you would think, well, dollars are worth less, so the market must go up when there's rampant inflation. Not necessarily the case. In the 70s, when inflation was in the double digits, the market was on its way down. So kind of a double whammy in the wrong direction, right?
Yeah, I got to go to this. This is just an old thought. I'm in the 5th grade, and my best friend, he's an artist already in the 5th grade, and he's a comedian. And he draws a picture of a dollar bill, and it looks just like a dollar bill, except for he's got Raquel Welch in the middle of it. Now, I don't know if you remember Raquel Welch or not, but I'm sure some of our listeners do. And he said underneath in the caption, he said, the Raquel Welch dollar, because of inflation, it makes men want to grab for it.
Yeah.
I mean, it's just crazy. He's talking about inflation and everything in the 5th grade. I mean, but anyway, here, hey, let's go back to the 70s, folks. Think in your heads if you were alive at that time. I'm 60 years old right now. 70s were a big time, activity generating time for me as a young boy. And I remember how much gas cost then. It cost under $1. Now, hey, we got down to about $1.50 here recently, but gas has been up as high as almost $5. So we got to put things in perspective here. It has to be built into your future outlook when you look out and you're looking at how much things are going to cost. When it's written into your income plan and it's factored in, you've got a good sound income plan. And we can use historical data and look at what certain things have inflated at, transportation costs, food, things like that. And we can build that into your income plan so that your income plan is customized and it's addressing inflation. But we have to address inflation because there's no doubt about the fact that our value of our dollar does go down over time due to it.
Well, and how about this and kind of politics aside here, Rick, with how this virus originated and spread and disrupted the supply chain, because let's face it, a lot of our manufacturing supply chain was based in China. There has been a lot of talk about more American-centric production lines,
right.
and
which will cost more.
Cost more. Americans don't work for the same wages.
They don't. So, but then there you again, you said wages will probably go up. So, things will go up in tandem. All right. And we won't get stuck, with a big bill here. But let's go back and talk about inflation one more time here. And let's look at it from the standpoint of it's a tax that Congress doesn't have to vote on, does it?
Right.
Okay.
Yeah.
Costs us more. More money's running through the system, more money's flowing through the system. We're getting paid more. We're paying more for things. It's just an unwritten tax.
Yeah.
And
I've heard it called the silent thief.
Yeah. And it runs through our economic system. So the government has that in mind when they do things. And so we'll plan through it, but we do have to plan on how that affects when we don't have any other income coming in from our investments. or no, when we don't have any other money coming in from our paychecks, we will have money coming in from our investments. Do those investments have some kind of built-in index hedge?
Yeah.
Okay. Will they be able to handle inflation? And in times past, Peter, that was usually done with investing in the stock market because it would offset inflation.
Outpace historically. But
Yeah,
there are always those
historically.
times, Rick, like what we're in the midst of where it does
Yeah.
not.
Well, that's why they say past performance never predicts future results, because the market is never going to act the same as it has in the past tomorrow.
Yeah.
So we have to look at it and say, do we have an income stream that's maybe guaranteed with increasing income opportunity? And that's an important thing that you need to look at too when you're building out your income plan is, do you want to make sure in our income allocation plans, right, that the income allocation part, the part that we have paying our bills, is in some form guaranteed that it will give some pay bumps, okay? You know, your Social Security has cost of living adjustments, right? If you have a pension, it might have a cost of living adjustment in it. Those are inflation hedges, right?
Yeah, but that covers what about, I think on average, I've seen
third
stats
of-
a third of people's needed income. So if only a third is adjusting for inflation, you're losing out on 2/3 of the increase in cost of goods.
That's right. So you're forced to, you know, dump more money at higher risk to try and get it to grow faster to offset.
And that's another key, at higher risk, because Rick, in this low interest rate environment, safe money, air quotes there, safe money is not keeping up with that inflationary force.
No, you're losing money safely when
I saw
when you've got it in the banks.
A 5-year CD, a 60-month CD, I saw advertised at 0.48%. Rick.
Woohoo! Oh, wow.
Not keeping up with it.
Oh,
now,
brother.
I know that you've got some solutions, some products that offer similar type of safety, not FDIC insured, but not at risk in the market. They do have contractual guarantees for protection of principal. And I think I saw a 6-year one that we were talking about, Rick, that gave 60% of whatever the market upside was over the next 6 years. So that could probably be a little bit more than 0.48% for 60 months.
That could, with you know, guarantee that you're protected against the market volatility if things go down, that you have a zero hedge in there, we'll call it, you know. So there are opportunities, and there's plenty in the insurance space, okay? There's plenty in the investment space, believe it or not, Peter. The investment world is looking at this and saying, because of the low fixed interest rates on treasuries and things like that, the insurance companies don't really have the leeway that they could in offering benefits and guarantees before this crisis. So the investment world now is coming out with some products that don't have the guarantees, but might be a good place to park money other than the bank right now, as you mentioned earlier, you know, losing money safely. But you could put it in there and maybe keep it where it's liquid in a year, and it would certainly outperform a 0.4 CD rate.
So you always talk, Rick, about segmenting off the growth money from what we need for the guaranteed lifetime retirement income planning money. Which side would these kind of products fall on?
Well, they would be a temporary holding tank while we go through this period, and then they might be shifted into more guaranteed products to protect the income side of the plan that we need.
One or the other, maybe, because if we've filled that bucket, at least for the time being, with the income that we need, then we want some growth on our other monies, right?
Right. So, but liquidity is the key here with these investments. You need to be able to get your hands on them if you want to take advantage of another opportunity, because things rebound that are not the same tomorrow as they are today. So, but the thing is we're in the new normal now. We have to at least try and get better options than going to the bank. I mean, you should have your liquidity at the bank for your emergency funds and things like that.
Yeah, monthly expenses.
You certainly have to hedge inflation by having some money at risk, and it needs to be calculated risk. It needs to be defensively managed if you're in retirement, because you're going to go into this phase where you're going to have to start drawing it down. And if it can go from top to bottom, you know, in in 2 or 3 weeks, like it just did, and it takes a long time to come back over maybe a 5-year period, and you're withdrawing money out of that pool of assets, that is a disaster plan for longevity of those assets, and also a disaster plan for you deciding, when do I want money to run out now in retirement? Because I'm still having to take a lot of shares out to get the same dollar I was trying to get out before.
Okay, so Rick, that plan won't work. Let's flip that. What is effective planning? What does a non-disaster plan look like? How do we structure that and make sure as much as possible that we have isolated and insulated, protected ourselves from things that are outside of our control, like the market and what we're seeing happen?
Yeah, we do an income allocation plan, Pete, and income allocation is a great opportunity for you to learn about. In fact, we have a book that we could offer called Income Allocation that, Peter, you know, you could probably share with our listeners today. And then also, we will go through the process of a 3-step review to determine what your income allocation plan should look like. And folks, what that is basically is to take your income that you have to pay your bills and make sure that you've got enough money to pay those bills with it. And you're going to look at your Social Security first to cover that once you're in retirement. And then you're going to look at any other streams of money that you have already planned that are coming to you to be on your income side of your budget. And then we're going to look at the expenses, and we're going to see if there's a gap. And if there's a gap between what you need to spend money on and what you've got coming in your income, then we're going to fill that with more income stream money that's guaranteed so that you don't have to worry about that. And then what's left over, we're going to take that and invest it at risk, and depending on how you want that to grow and also when you need to use that money. So that'll be money that's probably more market driven and also has some risk attached to it, but no more risk than our client or potential client would ever want to take.
Rick, we began the program today talking about the fact that we've got a little bit more free time, and what are we going to do with our time? Well, there's an old expression that time is money. And, you know, I think that if we don't dedicate just a little bit of time to controlling our money and making sure that our money is performing the specific jobs that we need it to, then we spend an awful lot of our time worrying about it if we don't have that plan. Whereas if we dedicate just a little bit of time, maybe go through your 3-step review, what the totality of that maybe takes 3 or 4 or 5 hours over the course of a couple weeks or a couple days, maybe. Then we've got that plan in place, and the time that we will spend worrying about our money is minuscule. I mean, maybe managing expenses and doing a budgeting process for 30 minutes a month, but we are thereafter in control of our money, and therefore don't have to spend the time worrying about it.
Right. I often say that worry is truly one of the biggest wasted emotions. Okay. We don't have to worry if we know that we have a plan in place, and we shouldn't worry because stress kills. I mean, that's the bottom line. It's going to take some years off the back end of your life. And if you want to make sure that you don't have that stress in place, then you need to go through a 3-step review and review what your risks are, and let us address those risks so that we have a plan in place to make sure that you don't have to worry. And that's our biggest objective at the Coastal Financial Planning Group, is to have people that are worry-free when they are in their retirement years. Now, we have to do something about that today, though, because we are in our pre-retirement years, or maybe we're in our first 5 years of retirement, and we're in that critical time zone called the retirement red zone. And so we have to start this process now. We can't wait. We shouldn't wait till it's too late, or till you're in your mid-70s or something, to look at the crystal ball and look at a retirement income plan. We should look at it in our 50s. We should look at it certainly in our early 60s. And we should certainly, if we haven't done one of these yet, we should certainly do it if we've retired already.
Yeah. I've heard discussions about like insurance and long-term care planning and how there's sort of a sweet spot for doing that. I don't think there's ever a wrong time to get protection, but there's kind of a zone, a time frame window in our lifetime that it really makes sense to, if we're going to address this issue, go ahead and address it now. And the same is true, really, I think, Rick, for retirement income planning, is that there is a time period, there's a window of time where you've got the best opportunity to make the best use of your money. And if you're falling into that zone, that retirement red zone, 5 to 10 years before or 5 to 10 years into retirement, really the time is now, right?
It
Rick?
is. It is the time. The time is now. And just share this quick story with you, Pete. I've had many a client come in and review their retirement income plan, as they do every year on an annual basis. And they always say this. They say, wow, I wish somebody would have taught me this earlier. Could you help my kids with this?
Yeah.
You know,
Yeah.
my kids are in their 40s or maybe 50s or whatever. You know, can you help my kids with this? And I'm like, yeah, this would be a great thing to teach somebody young, that you could have this plan in place even earlier than your 50s. But certainly if you're in your 50s, early 60s, you know, anytime in your 60s that you retired out now, it's not too late in your 70s, but you're probably kind of set in your ways right now with your income allocation plan, and it might have failed for you here, and you may be a little bit worried that it might fail again in the remainder of your lifetime. That might be another 20 years if you're in your 70s.
Sure.
That, you know, you should do one too. You should
Yeah.
have a retirement income plan developed for yourself to make sure that if we have another situation like we just had with the recent market downturn, that we're protected against it.
Well, we are going to continue to see regular market cycles, periods of growth and gain, periods of decline. That happens. And we're going to continue to see unexpected black swan events. Those things occur. And so if you'd like to make sure that you are prepared for them, that's the planning process. That's the 3-step review there at the Coastal Financial Planning Group. Pick up the phone, give them a call. They offer the opportunity to speak with you. No cost, no obligation. They offer the opportunity to go through a retirement planning strategy session, help you review and analyze your goals, your money, and how the two align. All you need to do to start that process is call 800-491-6220. That's 800-491-6220, 800-491-6220. Also, if you would like that copy of the book, Income Allocation,
Yeah.
give them a call. They've got those books. It explains the process. Rick, this book really details the outline of the structure that is how to plan for income and why it makes sense in how it addresses the specific risks that we'll face in retirement.
It does. And it's a quick read, 100 pages, easy to read, very liked by many people. We've sent out probably 500 copies of this book here recently, and it's just a great opportunity for people to get a quick read on it. And then we have classes that we'll offer that you can take part in to learn more about the theories of income allocation and some of the risks that are addressed in that book. Longevity risk, market volatility risk, sequence risk, withdrawal rate risk, all of those things that people need to know about to make sound financial decisions about their retirement income plan.
Yeah, the number one reaction, Rick, after reading that book is, I get it now. I get it. I think it's very digestible, succinct, easy to understand what the risks are that we will face that we may not have even thought about, and then how specifically to structure the assets to address those risks. And that's what we want. We want some confidence in our ability to have a plan that's structured to support our standard of living, the lifestyle that we're accustomed to. That's what income allocation will do. That's what the book explains how to do. That's what Rick Durkee can design with his team there, the Coastal Financial Planning Group, specifically for your situation. Pick up the phone, give a call, 800-491-6220. That's 800-491-6220. Rick, always appreciate your time. Appreciate you offering that book as you have to Charleston area savers and investors taking their planning, their financial future seriously. Ladies and gentlemen, that's you. Pick up the phone, give a call now, 800-491-6220. Rick, appreciate your time.
Yeah, and one other last thing, Peter. If you have found value in this podcast today, it's easy to share. Please pass it on to somebody that you care about, somebody that you love, somebody that's also maybe, a little bit depressed right now because their investments have gone down, and there is still an opportunity to take advantage of this. So pass it along. Navigating Retirement will come to you each and every week. Visit our website too at cfpgroup.biz.
Yeah, stealing this from my son's favorite YouTube channel creators, the guys that just sit there and you watch them play video games. Don't understand that, but huge following. And the reason why I think they always remind the kids, hit that subscribe button, hit that like button, leave a comment, ring that bell so that you're notified about future episodes of Navigating Retirement, ladies and gentlemen, and share them with your friends and neighbors because they could use this information as well. Rick, thank you once again. And ladies and gentlemen, we'll talk to you real soon here on Navigating Retirement.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.